Welcome, motherfucking back to Trades and Gains. I'm your host, Max Pitts. And oh my god, did Dikembe Mutombo come back to life? Because it looks like the stock market might be pulling off a huge rebound. So maybe your dad will finally come back with those cigarettes or that bottle of milk he promised to go get 20 years ago. But just like your reality, we need to understand if it's actually real. Is this a legit recovery or just another trap? Because, quite frankly, it just seems like we are getting positive data pops and then stuff is still tanking because we got some geopolitical problems and other areas that are huge issues and headaches for our U.S. government and for the president, it seems. There's a lot at stake right now, people. Not to sound like a president, but there's a lot at stake right now. We need to be careful. And if you're not paying attention, which most of you aren't because you don't read as much news as I do, let alone read as much as I do in general, let alone can read, you're going to get caught in the volatility vortex, aka a black hole. And guess what? When you're in a black hole, you can't see nothing because you're moving at light speed and you're just seeing nothing but colors. It's like the acid trip that your friend said not to worry about, or it's like that guy your girl said not to worry about. You should be worried. But here's what we're breaking down today. CPI inflation report. It came in positive, shockingly. Is it actually cooling down, or are we just being baited to, ease U.S. consumer pockets because everything's taken to shit like a person in hospice? We have Trump trade war 2.0. New tariffs, retaliation from Canada, of all the most peaceful, the second, I'm pretty sure it's like in second place next to Sweden in terms of peaceful places, and the EU as well. Don't know why we're beefing with them, to be honest. And most importantly, what that means for the stock market. We have dark pool and options flow. What is big money doing behind the scenes? Because those are the people who are making the markets, the Santa Claus to the toy makers. We got to see what they're doing. And we're going to wrap it up with some key stocks to watch. Nvidia, Tesla, SPY, and gold, of all things, are making waves like the ocean, baby. So let's go ahead, stay locked in, because this is going to be a game changer today. Let's go ahead and get started, folks. So let's talk some price action to kick things off. We had the S&P 500 raise about 0.5% in today's action. And that's after it's, been losing more than a girl with her virginity. I don't know if that joke landed, but the S&P 500 has been down heavily, and it finally made some positive gains today. We have the NASDAQ composite up 1.5%, and the Dow, I don't know if it needs therapy, some love. It only inched up about 0.2% on the day. I feel like it just keeps missing the train for the gains train. It just keeps missing it every day. Or it's like on the polar opposite, where like the S&P drops like 0.6% and that thing will raise 0.5% for some reason. It's like they're just on different pages. Now, what is driving our market today exactly? You're probably thinking, like, what is driving this market, Maxwell? Like, dear God. Well, there's a couple things. CPI came in lower than expected, which is fueling hopes of Fed rate cuts. According to Kaiser Soze in our Discord, his friend at Jefferies said we could expect a rate cut in May. I call bullshit, by the way, but we'll see. We had big tech surging. Nvidia and Tesla carried the market on their backs. They said, come here. Put it on their back and walk that shit up the mountain for us. You know what I mean? Some real play a pimp for real. activities going on and a short covering rally. A lot of traders were betting on more downside. So some of this bounce might just be forced buying, trying to shake them bears out the market. Because pretty much the formula was like, you could just wait 30 minutes, buy puts, walk away, come back at 130, be up 1,000%. There were only so many days in a row you could do that. It's like when you hit the jackpot on a slot machine time after time after time again, that shit is going to stop paying out at some point. So was this just trying to shake the bears out? Because remember, we had like over 100 million bought in $527 puts by institutions. You think they're going to go ahead and bend over and get fucked? I mean, this ain't a casting couch, so I'm not going to say yes. But here's the thing. We're still in a choppy market, folks. So that means we're going to have up days, we're going to have down days, we're going to have days in the middle, we're going to have days where not shit happens. So this rally doesn't mean we're out of the woods quite yet, because guess what? That motherfucking bear or wolf might come and eat your ass from the back before you can even say, oh my God. But let's go ahead and talk inflation, people, because this is what's really driving the market action. We had some nice CPI data come in today. Headline inflation came in at 2.8%, 0.1% lower versus the 2.9% expected, showing that it's finally cooling off. I don't know how you think 0.1% is cooling off, by the way. Like, come on. Get it together. You know? Like, what the fuck? 0.1%? And we're rallying? We need to get to 2%. We're still 0.8% away from our target goal. Like, you think rate cuts are going to happen? Literally everybody had buyer's remorse after doing rate cuts when we weren't even close to 2%. So what are we talking about here? I digress. Our core CPI was at 3.1% versus 3.2%. Again, these numbers do not impress me. These numbers, I don't care. It does not impress me at the end of the day. But it impressed the market because this was the lowest since April of 2021. Now, this should be good news, right? Lower inflation means the Fed can finally start cutting rates, right? Slow down. Because Powell and the Fed are still cautious. And this is why. See, this is what y'all don't do. You don't read. You don't research. Housing inflation is still sticky. Shelter costs are still up 4.2% year over year. And mind you, nobody in the economy can afford housing. So it being up, not a good sign. Wages are still rising, and the Fed is watching this like a hawk out on an island. So you got to watch out for that, right? They don't want to cut rates too early because they did that shit last year, and everybody was like, we regret it. We shouldn't have done that. That wasn't a good idea. So, like, do you really think they want to go into buyer's remorse 2.0 in another year? I would be shocked if we get a rate cut by the mid-2026, to be honest. I don't even think we're going to get one this year. That's my opinion. But I digress. So while the market is celebrating, the Fed might be thinking, hold up, we ain't done yet. Which is not a good sign for us, by the way. So don't think they're like, oh, hold up, we're not done yet saving people. It's more like, hold up, we're not done, like, trying to figure out how to load this market so we can be the true winners. Now, we got Trump's tariff war 2.0 and why it's a big deal. And this is a major wild card because he just reignited a full-blown trade war that we have zero business in being in. Now, what happened exactly? 50% tariffs on Canadian steel and aluminum, which was a big-time move by the big man upstairs, you know? That is aggressive. That can cause some issues. And they threatened tariffs on Canadian auto exports, which could wipe out their entire car industry. So keep that in mind. Canada and the EU retaliated with their own $50 billion counter tariffs. That doesn't sound too good. I don't know about y'all, but to me, $1 billion would change my life. Fuck, 100 million could change my life. So, probably not a good thing for our economy, our market, if they want to counteract, because that means they got some more in the chamber. Now, what does this mean for stocks exactly? You're probably like, why do I care about this for the market? Like, why do I care? Well, here's why. Manufacturers will get crushed. Higher costs equals lower profits. Remember? Like, if your cost is higher, your profit margin is lower. Basic economics. We also have autos that are in trouble. Ford, GM, and Tesla are all severely impacted by this, by the way. And inflation risks rising. If cost goes up on these, guess what? Those rate cuts you think you're going to see in May, bye-bye. Bye-bye. So the market, again, just like your ex-wife and the reason she divorced you, she didn't like uncertainty. The market doesn't like uncertainty either. And right now, nobody knows how far Trump is willing to take this. And most people aren't willing to bet on it because he's fucking crazy. Like, the man, oh my God. You're banking on a wild man to save us. So just keep that in mind. I will be right back because we're about to go break down some options and dark pool levels for y'all. Let's get into it. Now, for our dark pool data, there's secret buying and selling going on. There's snakes in the grass, folks. We had $930 million in SPY dark pool trades at the $556 level, which is a huge bet. Our biggest block trade was 1 million shares of QQQ at 475, which is showing there's some bullishness on tech. And GLD saw unusual buying. Is smart money starting to hedge? Now, some options flow here. We had SPY with 118 million in overall flow. Again, it's still doubling up. We got 41 million in calls against 70 million in puts. Nvidia, we had 49 million in total flow with 32.23 million in calls against 17 million in puts. Looks like people maybe are getting bullish back on Nvidia. I don't know. This might be a bullish setup. So we gotta just wait and see. Tesla had 43 million in total flow with 8 million in calls versus 14.5 million in puts. This is also bullish. Is this because Trump bought one? Or Trump was given one by Elon? I don't know if he bought one. But I also see these corny LinkedIn posts talking about how people are disassociating from the brand. I'm not going to lie to you, Tom. Nobody cares that you turned your Tesla back in. I promise you that. Because you live in London and pretty sure EU sales were dropping is already priced in. So you turning in your little measly Model Y has done nothing to the stock, just as an FYI. QQQ, we saw 36 million in total flow with 15 million in calls versus 20 million in puts. Apple was also another bullish, not bullish, bearish contender in our market today. We had 2.21 million in calls versus 14.36 million in puts. Are people not that hyped about the new iPhone 16e? I highly doubt it. Now, what is the takeaway from all this? Institutions are still playing both sides, like a girl in college. They're loading up on tech calls, but they're hedging big with SPY puts here. What does this tell us? This rally that you guys are so excited about might be short-lived. My 535 price target remains solid. So please, kiss it. Now, key stocks to watch. We got Nvidia breaking out with some bullish flow. We have Tesla. Is there a short squeezing coming, or are we going to dump back to 190? Gold, the ETF, there's a big hedge against uncertainty. Are people going to move to those safe haven assets because they know something we don't? And the S&P 500, institutions are still bearish on this. So please, please, please be careful. Because if they're bearish, you definitely should be bearish, considering that you are a peon compared to what they're spending. Now, we covered a lot today. So let's go ahead and make like a condom and wrap it all up. If you're trading this rally, be cautious. First things first. Like, pay attention, please. Because this could just be a short squeeze for a bigger dump down. Watch for profit taking around key levels. Look at those dark pool levels. Look at where institutions are at, because that's what's going to tell you when you need to start, maybe trimming some of the fat, taking some of that profit, making some of that money, And most importantly, just like a condom, the condom of the market, stop losses. Set them and forget them. Now, if you're investing, stick with quality stocks, strong balance sheets, and low debt. Also, stay away from consumer stuff right now, because consumer sentiment is dog shit. Dog shit. Why you think Target, Costco, all these consumer stocks taking a dump like a hot pie, So stay away. Because guess what? The institutions ain't buying, you ain't buying. And if we ain't buying, we ain't flying, folks. Look at hedges like gold or defensive sectors even. And don't chase to try to make a quick buck. Wait for some clear confirmation. If you miss a day, who cares? It's better than losing your portfolio in a day, I promise you that. And if you're unsure what to do, that's normal. Especially in these market conditions, I wouldn't know what to do either. Now sit back, watch, and wait for a better entry. That's your best bet if you're uncertain and don't know what to do. Now, is this rally for real, or is this the market setting up for another rug pull? Back to 535 on SPY, by the way. Drop your thoughts in the comments, and if you got any value from this, smash that like button, subscribe, and turn on notifications. We'll be back tracking the market daily tomorrow, because we do this every day, folks. I'll see you in the next one. This is episode, by the way, 120. Shout out to myself for getting us here. I'll see you guys at 1:30. Have a great night. Love you all. Kiss your mother. Tell your kids you love them. Go save some money, and let's go make some money.